Record this. Let me bring the questions up real quick. All right. So the questions that we had so far. Were best time frame to mark up your chart from 4 hours 15, 4 hours 15, or from the daily. Always start from the daily. Always start from the daily. Usually when I open up my chart, this is the daily for like this. I'm just using AUD, and let me use GU as an example. GBP, USD. So like in this case, opening up the daily, if we go back and look at, let's do a replay this day, right? We hit play. This was yesterday, right? Over here. So if you saw this candle right here, like this, when the market first opened up, what would you be thinking, Neil? What would you be thinking?
I didn't hear you, Corey. Go again.
So I go from daily down to the 1 hour. I don't usually go anything less than that when I'm marking up my chart. But just starting at the daily, like what would you assume today would do? Just looking at this, we would pretty much open up and either we break out of this high of this wick or the low of this wick, right? And if we trade near the highs, because we already rejected, I would likely be looking for a sell if I saw price open up and push up, right? So if price opened up and started pushing up and it got near this high, which is what I was looking for today, I would be looking for price to sell around here because it's already shown that it wants to potentially sell off near this high, right? And try to take it down below this low, right? That's my goal, right? Because I know that if this is on the daily and we couldn't get above this level right here on the daily, if we open up the next day, which you can see what happened, we pushed up near the high and rejected. I tried to get us in this, but it was today was choppy. So I tried to get us in this, near this high, but I kind of got us in a little too early and it was just playing around. So I got us probably in. We could have stayed in. We didn't really go much higher than our entry. Let me go back and see what the entry was real quick. We could have actually stayed in, but it was just really, really, suspect today. So I wasn't trying to stay in it. Let me see. We got an entry at right here, right? We literally could have stayed in this. We would have only seen at most 7 pips, 8 pips of drawdown. But I just didn't want to play around in this today. So I just closed this out. But I know some people might have stayed in, I don't know. But again, these are the kind of things. So I'm going 1 hour, 4 hour. I'm looking at my rejections, looking at my areas. I know this order block right here, and then this smaller one inside of this. So this is our first time trading to this back around this area. So I already know I should get some kind of reaction off of this.
So much of
Like,
36XM,
right?
we want you to see them.
Um,
36XM video lets you
and
watch some of your
even
favorite
if it
Series
doesn't
6.
like just immediately, if I get in the trade, it should at least give me some pips, something to go with, right? So the best time frame for me is I like to start daily, 4 hour, then 1 hour. I usually don't go any lower than that. If I look for my entries from those, but I'm going to be trading areas from one of those other time frames that I just mentioned, 4 hour, 1 hour, or daily. I might drop down to the 15-minute. I need to start dropping down to the 5 minute sometimes, but you know, that's just again part of the plan, part of the analysis. Like it, regardless of what I am going to take, is gonna, whether I use the 5 minute, where I use the 15, where I use the 1 minute, I'm going to be basing that decision off of something that was on that higher time frame. Okay. So I think that answers your question, right? That answered it. So, Renita says, how can we tell that a reversal is imminent? What time frames are best to look on? Same thing. I know that there are going to be areas where there's going to be a higher probability of a reversal, right? There's going to be rejections near lows, near high, monthly levels, daily levels, weekly levels, yearly levels. When I see those kind of areas, I always key in on those, because I know that when you're near one of those levels, you are likely to have a rejection. If we look at EU, right? Look at EU. Once price pushed up above this area, this is the weekly price, right? It pushed below it, it pushed above it, it dropped down and touched it, then it pushed up, right? But what happened when it came back down to it? It tapped it and then it ran away from it, right? It's gonna act as a magnet, and it's gonna act as a rejection, right? So another area, like if we look for, let's see if I can find yearly. Right? If we look at this, right? We were trading up, we pushed down, we pushed back up. Look what happened when we touched the yearly price again. It didn't even stay there for a day, right? It just dropped really, really hard. Made this low. This is a yearly low at the time. Pushes all the way back up. What happens again? We get back on this area, we reject it, and we sell off hard, right? We get near this low. This right around where we sitting at right now. And we already bought from here one time. And look what's happening now. We starting to kind of hold right here. Maybe we push up to take out some of this liquidity. Maybe we do, maybe we don't. Or we take this low out or this low out right here. So these are the kind of things I look for when I'm looking at my chart. Where are these significant lows? Right here, most recent right here, because that's where the liquidity is. Where are my recent highs? This one. Where are my equal highs? Right around here, equal highs. Like those areas are like telltale areas that something is going on right there, right? Something is waiting and lurking, right? Either I'm getting a big reversal or I'm getting a big rejection. Whether I'm getting a big reversal or I'm going to get a significant break at those areas, right? And I like to try to put myself where I see the highest probability that we should make a move from, right? So if I know this order block right here has been traded from, and I see price sitting on that, I would get in this trade, right? Even though it's sold off, right? It's sold off, but getting into a trade right here, I still would have been able to get into this trade and make a decent amount of pips before it reversed, right? And then even coming as it came back down, it never took out this last series of candles right here, and it held. So this would be also still be another little area that I might consider to trade from, right? And in this case, I would have been able to take this all the way back up, you know, given the situation, right? So, you know, that's kind of why I stick to higher time frame analysis, because I like to get in my trades and I like to one shot, one kill. Like I like to get in those trades and take one trade, and I don't have to do anything but take that one trade and keep it moving. If I can get in that trade and I can stay in the trade for a week, a day, a month, like that's what I'm gonna be trying to do. That's what I'm looking for. If I can stay in it, I don't have to get in a trade every day. I don't have to you know, press trying to reach my goals, my trading goals. I can already have something running in place already, and I don't have to worry about it. Just like today, today's entry was at 41.45.
Because they're doing upsell, man. That's upsell.
Entry today was
So hay gente
41.
comprándolo como tú y vendiéndolo. Because not too many people know about it, right? So what you do is you buy it.
Mira, eso está en eBay, eso está en Amazon, eso se vende en el Dollar Tree. Yo vi mucha gente no saben que está ahí, pero si llegan a saber,
Davido, Davido, cállate. Tú loco.
Hey, what's up?
Cállate. What's up, bro?
What's good, Papa? I didn't even know I was unmuted, bro. My bad.
See,
Why you listening to my intimacy?
I wasn't. Oh man.
I think we all were.
All right. So similar situation. When we came into the day, this candle didn't exist, right? But we had this candle right here, right? And we had already been given signs that we might push down, right? We check our futures, right? At the time, checking our futures, the futures were up, right? But the futures were up at the time of day that we entered the market, but we were near a high, right? When you see the futures up near a high and have already rejected, you need to be asking yourself, like, if we are going to stay high, do we break the high of the day? That's right here. The high of the day is 45 flat, right? Right. So that's the high of the day. So that's the first thing you need to know, right? And if we look at the futures, right? And the futures are saying, you know, really, really strong positive numbers, right? But we're near this high, right? Are we oversold or are we overbought, right? That's why I like this one right here, because this tells you a heads up, right? This gives you a heads up. That's why this is this HH high. That's why we have this red higher high, because it's at a overbought situation, and it could give you a sell-off from this point. Not to say it's going to, but if you are in a situation where your indicator is lining up, then you could get the sell-off. So this is oversold on the day, overbought on the daily, it's overbought on the 4 hour, it's overbought on the 1 hour, on all three of those time frames, right? And once the market opened up, around the time we gave this call out, right? We already had wick rejection, wick rejection, wick rejection into this area, right? Here was when the call was made. Let's go down into the 15-minute. At this point, we already see this high is struggling, right? We see that this high is struggling. Not only did we make the oversold, overbought on this day, yesterday, but we even came back today during London, and we also were oversold, right? So after we get this understanding, let's go back to the daily, right? After we understand that we're in a situation where we're near a high and we already rejecting, on the 4 hour, you need to pay attention to these three candles, right? The 1, the 5, and the 9. Those are your most important candles out of the trading day. The 1, the 5, and the 9 on the 4 hour time frame. You can look at the 1 hour time frame too, but this gives you a clear picture of what's going on. And you need to pay attention to those candles because those are the London, the pre-market, and the New York candle. Those are the most, that's the most volume in the day, those three candles on the 4 hour. Most of your moves, and I'll go back and show you, are going to happen based off of those, what we consolidated right here. And we were kind of choppy this whole week. So this won't really be valid for this particular situation, but here's 1, here's 5, here's 9, impulse right here. 1, 5, 9, impulse, right? So you always want to know what's going on with those candles, right? 1, 5, 9, impulse. 1, that's 9, that's 1, 5, 9, impulse, right? So repeat it, right? 1, 5, 9. This gave you the entry for your rejection, even though the following candle was the move, right? 1, 5, 9. This gave you your sell-off, and you got to return the price. So note those things on the 4 hour, right? Then once you note those on the 4 hour, we are already trading inside of this order block right here. Here's the low, the medium, and the high. Note, understand what these numbers are and why, right? So if we see, like we have this morning, we are oversold, overbought on the daily and the 4 hour. And when we come down to the 1 hour, you'll see we already started rejecting here. And then London gave us this high right here. And once we got in the pre-market time frame, we made this low and we pushed up, right? Once you see we're in a situation, we're near the high of this order block, and we have already shown that we can't push above this, that was the reason for the entry. And now we can go to the 15-minute. Let's go to the 15-minute. Get more precise. Okay. London high. We make this low. We fail on the London high. For my broker, it's 41.40, 41 for 15, but really it was this candle right here. London high, we make a low. We fail the high on this rejection right here. Take this entry, and it goes, right? And today, it was kind of slow. after we made this low around 9:45, it just pushed back up. It even gave you a sign that it was gonna reverse, right? Because it came down to the daily, came down to this order block and this order block, and it held like it wanted to actually buy. So I actually got into a buy, but I left the sell open. But I didn't add on to the sale though. But as you can see, it churned back down, you know, over time, but it wasn't an easy sell or an easy buy. It was very, very nasty, actually. So that's what you want to look for. And then you can start looking for patterns, you know, double tops right here. Here's a double top. Another reversal pattern, double bottoms. But just don't trade every double top or double bottom or triple top, triple bottom. Make sure you're at an area where you should get a reaction from. Like you wouldn't necessarily trade this double bottom if you weren't
That's
at an
weird.
area.
Oh, so good. Sabes que as chaves de defesa.
You wouldn't want to trade this double bottom unless you was on a lower time frame or there was a reason for you to trade that one, right? Just like you wouldn't want to be, you know, double topping right here just to get this move when you had a better setup to the upside, right? So, you know, if I do take a trade, it's going to be a justifiable reason, right? We're going to have we will typically have a logical explanation behind it. So I like to find out where on the 4 hour and the 1 hour, where are my last order blocks, right? So we just made a new one right here. This is the most recent bearish order block. The most recent bullish order block is right here by the weekly. We already tapped it once right here. Right? The 50% is right around the weekly. And I would be safe to say that we either come to this and hold and push up, or we trade down into this right here. We do one or the other, right? And if they want to take this further down from where it is and not hold a weekly, this would be the other area. So if this was to continue to the downside, I don't look at this for a reversal until I get to here or here. Anything else, I'm going with momentum. Okay. So I think I explained Ali's question and also Rita's. Can I explain your sale today? Who got in there? I think some people missed it. Some people missed it.
Yeah, I missed the sell, but I got in for the buy.
Okay. Okay. What was I? Did y'all not hear me call it, or what was it?
No, I I heard you call it, but then I was like, wait a second. I know the way you analyze is different, and it did play out. But I don't take something if I don't see what you see. So that's why I'm on here, to learn how to see how you see things.
Okay.
But yeah.
Who else didn't take it? I think it was a couple people that were on that missed it.
I heard you talk about it, but I didn't think, you want us to take it.
Okay. I was just trying to make sure it was something that I didn't do, or I wasn't loud enough or something like that. I don't know. Let me see. Janice, you missed it. You just didn't hear me call it, Janice?
I didn't hear it. I didn't hear you
Okay.
call it.
Okay.
This Discord be giving me alerts. This is late. I don't know what's going on.
Okay. Stella, what's up, homie? No, Stella. Okay, you did US 30.
So when you talk about on the 4 hour, the 1, the 5, the 9, that's the time of the candles you're saying to pay attention to?
Mm-hmm.
Okay.
Mm-hmm. Yep. 1, 5, and 9. These 3 candles are the most important candles of the day. The 1 candle is London. The following candle is pre-New York. And then the 9 is the New York candle. And you want to watch that because the London gives you the first implications of where the day is going to go, right? London is the first time of the day, of the trading day, when there's an increased number of traders in the market because you have a large backing of like institutions that are trading during that time when London opened up. And then you have retail traders during London that start trading at 9 a.m. London time, 8 a.m. London time, right? And then you have some of the people that got in London, and then you have some of the people that get up early for New York to get into this 5 o'clock candle, right? And those, there, you combine those with the number of people that are in London sessions still, that are still trading London with an increased number, right? And then at 9 o'clock, of course, the market opens and on that candle. So that's when everybody, London and New York and pre-market are all in the market at the same time. And if it doesn't give you the move during the 9 o'clock candle, it will set you up for the following candle to get whatever the move is going to be. And there will be moves outside of this. Of course, there's always conditions that will give you a trade outside of these hours, right? But the majority of the moves are going to happen on these candles. And you can go back and back test this. I challenge you to go back and back test it. And you will find this on every pair that I can think of, every indice, especially if they have especially if they're paired with USD on Forex. On Forex pairs, if you pair with USD, this is automatic because that's what it's just almost, it's almost etched in stone, right?
Okay, thanks.
Let's see. So my next question is from Neil, is doing your markup after confirmation of a trend. Is there a way you can just use the fibs to use your entries? Yeah. I'll be honest though. I only trust my higher time frames as far as my entries go. So if I'm on the 4 hour and I'm using this area right here, for me, I will use these levels right here. And if, again, I gotta see price come down into this area between 618 and 786 before I take the trade. We could see it happen off the 50, but I want to see price trade down to these levels. And the way I would take these trades is I would not use my normal lot size with this. Sometimes I'll use pending orders and just place my orders at these 3 levels. 618. My stop loss would be here. My first area I will look to target is here. My next order would be here. Stop loss still here. Still at least trying to get back to the high. third and final level I would take 786. Stop loss at 100. And again, at least getting back to the zero. That's my initial goal. However, if I trade all the way down there, I'm looking to make a symmetrical move up to the 100. So whatever the 100 is, I'm looking to make it to this area. And at minimum, the 618. And this is also how you can do projections too. So I know that a lot of people are, wonder how you kind of pick where things are going to go. I use higher time frame charts to do projections, right? So that's what I would look for. So based off of this move, if we get a move down to one of these 50, 618 or 786, we should get a symmetrical move or at least hit these targets, right? So that's what I would be looking for. Now, the way I would handle this though, right, Neil, is I would measure whatever this is from the entry right here to here. So this is, for this particular trade, the stop loss will need to be 300 pips, right? And if I'm going to put a pending order on this, I would probably put a 1 and just leave it, because that means that even if I go all the way down to stop loss, I would only lose $300. I can handle that, right? No problem, right? Over here, this is 240 pip stop loss, right? Cool. Maybe I'm gonna use a 1.5, right? Or a 1, right? So I would probably reduce that lot size, right? Then the last area I will enter is down here. This one is 175 pip stop loss. Maybe at this point, I'm gonna leave a pending order that's probably like a 3. So altogether, I might have a 8 in, or whatever the case is. I'm just using hypothetical numbers, right? But that's how you would leave, and that's how I would use the fib. That's how I always use the fibs. So that way I can just, snipe in. I don't even have to pay attention. A lot of times I don't even know that I'm in the trade, right? Even on this trade, I'm still in this from here because took the same approach off of this area right here. So you just have to manage your risk a little differently and just understand where you are and how you're expecting to get into the move, right? Okay. Say you've been watching Anastasia. She does order block similar to you. Yep. Yeah. It's not a similar. I mean, either you do it the way we doing it, or you're doing something wrong, probably. Because it's not a. There shouldn't really be like too many differences in how you find order blocks. It's really simple. It's really, really simple. I've done like multiple sessions over it. I think that the best thing to do, if you guys still have questions about it, I believe that I did a session on it already. And I can send that to you guys if you send me a message on Discord or Telegram or whatever. I'll send it to you. I don't want to broadcast it, but I can definitely send it to you guys individually if you want it. Yeah, so dang. This one was 1, 2, 3. Okay. Let me look in the chat. Robin said, Rob says 159. That time is Eastern. Yep, Eastern time. Eastern. 159. Yeah. Mike Mile talks about 5-6 hours. He watches on his calendar, on his chart. Forget that one. But probably including those. Yeah. 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 He talks about the 5 and this through the 6 hour, 5 a.m. to 6 a.m. Rob.
No way, Corey. He talks about 5 different hour times that he watches, and he kind of takes notes on.
Well, so those are primaries. There are other times you need to watch too. So you have those 9, 5, 1, 5, and 9 candles. Then you'll usually have a move you might have a move sometimes around 9 to midnight. 9 to midnight. So it's 21 till 10 till 0. That would be these 3 candles. And then you have your after London, your London close trade. That really starts at 10 a.m. Your London close trade starts at 10 till about noon. London close. London close is at noon Eastern Standard Time. So you really thinking about that 10 to noon. And then you have the lunch break to close trade. And that's pretty much 1 to 3. Like a lot of times given the setup during the day, you might have a retracement on the London close and then a continuation during during the lunch to close trade. So it just kind of depends. So you'll have something that look kind of like this. If I'm near a high during London and I trade back up near New York, I'm going to want to look for a rejection. And then by the time I get from New York session to the London close session, if I haven't made a low, then I'm going to watch for the continuation. If I made a low, I'm going to expect for it to possibly retrace somewhere up in here. And then right around lunchtime, you should get a continuation if that's what it's going to be. And this is how it would look a lot of times. So London, if I'm at a high, I'm looking like this. If I get this and it holds, I'm looking for a continuation in New York at the 9 candle. During this time frame, New York and London open, you got pre-market. And in pre-market, you want to see either a low made or a continuation made during this time frame right here. And then the lunch close, you want to see either the retrace here or the continuation here. So it just kind of depends on what the current outlook is for the day. That's why it's good for you to start with the daily candles and know what's going on. So like today, if we looking at, like, I'm gonna be looking at GBP USD again, right? Because I didn't get in that high that I wanted to, but it was janky, right? So what I'm gonna be looking for again is what happens in between this area right here. What's gonna happen? For tomorrow, when I open up my charts, as it stands, right, I expect us to either push up into this wick somewhere, or we just gonna reject one or the other. If we push up into this wick, do we trade above the high? If we don't, I'll be aiming for my sales again, right? If we break above this high, I'll assume that they want to trade through this high and continue up. But if we don't, then I will be looking for the sales. And then also, like, I look for pairs that correlate and inverse correlate, like dollar, gold, GU, dollar, EU, dollar, all those inverse correlate, right? So at the same time, this making a low, this is making a high. This is making a high. This is making a high, right? But if I open up another chart, let's go over here. Let's see this one that inverse. Let me see UJ. I don't think UJ inverse correlates or correlates. Let me see. USD. Yeah. Right. So dollar makes a low, GU makes a high, EU makes a high, gold makes a high, dollar makes a low, CAD makes a low, right? So that is one, that's how you want to look at things, right? This will kind of give you a heads up on what and where you should be expecting to trade. So if you look at the daily and the daily is telling you you at a low, are you going to hold it or are you going to trade through it? If I trade through it, I know I can keep, if I trade through this on dollar, right? If dollar is showing signs that it's going to trade through this low over here, then you need to anticipate that, okay, if it's not going to trade through this wick, so the same approach from earlier, right? This is how yesterday started. I was paying attention to this area right here, from the body of this wick, this candle, to the low of this wick, right? And if price doesn't break and close out of this, I know that it should push up, right? So anything that's trading with dollar, I should be able to take a buy. Anything trading against dollar, I should be able to take a sell. So as long as I see dollar hold this area right here, and this is a good strategy for, like, they call it a pin bar strategy too. You would be trading this pin bar, and it's a lot of ways you can enter. Like when you see this and you're expecting a reversal, you can trade this, you can enter this trade like so many different ways. You can wait till you get near the low, or you can put a sell limit, a buy limit near the low, and let the price just drop down and pull you in. Or you can wait till you see the price trade near the low, put a buy stop above it, and just let price pull you in. Or if you want to be safe, put a buy stop above the most recent up candle near this pin bar, which would have been this candle right here. You put it above there. You let price do whatever it's going to do underneath this candle. But once you see once price breaks above here, it'll automatically pull you into that trade and you can just go. That one has the biggest drawdown though, but it's the safest. way to do it, because if you do it that way and it never comes back up there, then you never get pulled in the trade. And you don't have to worry about getting in the drawdown. But sometimes it'll wick up, drop anyway. So, you know, that puts you in a big drawdown situation. But if you're going to do that, I would, again, use proper risk management. I wouldn't probably leave a trade on the chart with a high lot size. I would probably use a low to medium to low trade so that I don't have to worry about getting into that trade with any issues. Okay. And if I use this as my entry, the low is my stop loss. If I use a order near the low, I will use this as my stop loss right here, or this the area right here. That's the stop loss. But typically you're trading near where the move is going to happen. So if you trade near the low, you would have already been up, you know, a couple pips. You know, this UCAD, I mean this dollar. So, you know, I'm just giving examples. Let me see. CAD. Dollar go. Oh, yeah, 92.5. Big maybe quarter. So I may go toward 95. Yeah, I'm looking for it. I'm looking for it. Looking for it. I wanted to hold this low right here. But I'm okay if it doesn't, because I know we got this area, this little order block right here, and then this one right here. This one right here. So this one is majority of the body. We have to look at the lower time frame, but the majority of the body we want to focus on is 92.25. That's around the high for this 92.25 area. If it wants to go further down, we focus on the middle, which is the 92 flat. So I would still be looking for sell to buys as long as we don't break below this area right here. So that's what we would be looking for. The sale on SPX was pretty decent. Let me see this joint. Yeah, I tried to buy right here. I bought over here and it closed out when it pulled back. So this is the only thing still open. The sell was pretty much hit all the targets, but I'm gonna just let it ride. We got an equal low on US 30 that might hold, and then we got these two order blocks and this liquidity from the daily right here. So I think that before we move up, with these equal lows right here, this order block and this liquidity here, we'll probably see them take that and then push up before we get a really strong up move again. And I still see us taking out this 45.50 area at some point. I still see us taking that out. We still got similar situation, right? We got some equal lows. Let me look at the 1 hour. We got this low right here near this order block. Then we also got the weekly right here. So we may come down, make a equal low, or we might dive into this weekly a little bit. That would be a potential buy setup. If we don't have that, then we come down to this area right here. Like I said before, this is the next order block. So let me find this chart real quick. I just want to go over some real quick. Put this. GJ. Right here. There we go. All right. So zoom in. Screenshot this. And study this. This is like, this is will help you to understand. This will help you understand. Anybody got any more questions?
No, remember the last session, or it was like 2 weeks ago, I was telling you about the 50 daily EMA. It tested that on the 19th, and it's gone up about 190 points, and it goes generally, like in the last year, it's gone about 140 to like 230 points before it like does reversals
On which?
on S&P.
So the 50. on the 19th, right?
Correct.
Yep. Yep. So clean. Definitely, definitely a good confirmation. I used to use moving averages a lot, but I don't typically use them in, but it is definitely a good confirmation.
That just kind of makes me believe that it's getting close to like doing a reversal towards that again sometime soon, because
Yeah.
it's like done its like big expansion.
And then, you know, we've been doing 3 to 5% corrections on SPX this whole year. So on the daily. So we've been doing 3. Like I said, this is about, that's almost 3. This one's 3 and 3, 6, 3, 6, 1. This one's exactly 3. This one's 3.2. This one's 4.8. So definitely once we're near these highs, if we got a 3 to 5%, I think this drop was like, let me see, what was this little, this wasn't a real correction, but let's see what this was. So pretty much a 1% right here. For us to get a 3% from here, we would be looking at 44 flat. 44 flat. So we probably need to push up a little more. I think they would, before we get that, we probably are going to want to push up a little more. So that way, let me see. We measure this last move here to here. We just got -2.7. We just got 618. 100% will be 46. So we might get somewhere in between the 100 and the 618 before we get a pullback of that caliber. Let me see. So this is only another 1.5%. Yeah, we could definitely do this. This 4,600, 4,625, between 4,600 and 4,625 is definitely doable. That's only 1.5% gain. So we could definitely do that. And if we do that, we do this, get around this area, 3 to 5% is back at this high, back at this order block. And if we get 5%, that's still almost 5% is still near this last down candle. It's probably order block on a smaller time frame right around here. So it makes perfect sense. And that would also probably give us another 50 EMA tap too, right there. Based off of the trajectory. If we look at that, let's just use this one. Let's use this one. And let's say we do get somewhere around 46 and 25. 3% is gonna get us around. Yep, it should get us back at the 50. Yep. Somewhere within this little space right here. The 50 should be somewhere along this area right here. Market geometry. Right now is lining up with this one more so. So cool, cool, cool. Anybody else? Anybody else?
Hi,
Anybody?
Corey.
What's up? What's up?
Just a quick question. Sorry, I'm whispering because I'm getting the baby to sleep. But you think we'll trade down to the weekly on Nas?
The weekly on who?
Nas, Nasdaq.
Okay. On that. It's a possibility. I don't know when though.
I took that sell this morning after it rejected that high. So I'm watching her.
Yeah, it's a possibility.
Yeah, I mean, she's quite bullish still. But
I don't know if we get there, back down there this week.
probably not.
If we don't do it before this week out, which is the probability is low right now because it's Wednesday. Well, I take that back. It is NFP week, so anything can happen. If it wasn't NFP week, I would say definitely no. But because it's NFP week, it could definitely happen.
Did you read that article that was insinuating that jobs have taken a slowdown and researchers from the Dow haven't seen the increase of employment that they were expecting? Released this morning.
I didn't see that. But
Yeah,
I mean,
NBC has it.
I mean, it's kind of, kind of to be expected as the cases go up. So
Right.
it's kind of to be expected.
Thank you.
Oh, no problem. And then like tomorrow, we got unemployment claims, and we got our first numbers released. on trade balance. We got our trade balance. That should probably be about the same. Should actually probably be a higher. This one should be higher. That's why I always check both of these, because that should be higher than that. So over here, look, trade balance is high. Initial jobs claims, and counting job claims. Like all this is high. This is even medium as compared to Forex Factory. So that's why I always check both of them.
Thank you. I'm gonna start using that one. Thank you.
Yeah, look at them both. I get this one first just to get a quick rundown. But if I see a yellow folder on this day too, I just will come and check between both and see, because I don't know why they have this as yellow or this as orange, when this definitely should be a red folder right here. Unemployment claim. Normally, under normal circumstances, maybe you could say this was a yellow or orange folder because the market was stable, but right now we're not in the stable market. So this should be a little more, this should be red. So.
Thank you. I appreciate it.
No problem. Cool. ¿Qué pasó, F? Davido. All right, guys. I'm gonna hop off. If there's no more questions, if you want this session, give me 1 second. Let me stop the recording